Ken, good to see you. Thank you so much for being here. How would you assess the backdrop and give us your forecast for the Fed meeting this week and all these earnings? We've got 5 of the Magnificent 7 coming out with fourth quarter numbers. Let's see. The rubber is about to hit the road.
It's going to be a big week. Look, it's definitely a Goldilocks environment, I feel, Maria, where it's not too hot to raise rates. The Fed's not going to raise rates at this meeting, obviously. Last time they raised rates was back in July. Not too cold either, witnessed by the 3.3% GDP rate. So that's the Goldilocks mix you have. And look, there's been a lot of talk about inflation coming down, interest rates coming down. And with it, guess what? The dollar's coming down too. These multinationals that will be reporting, I think are going to do pretty well. By the way, the playbook I usually use for earnings still lives, and that is, hey, buy those companies that beat estimates for the quarter, which is December 31st, and then look at those companies that can also guide higher. Because what happens then, Maria, all these analysts, they trip over themselves to get on board, right? They go from a buy to a strong buy, hold to a buy, $400 price targets of 500, and I hope to think this is more like IBM last week, beating numbers in AI. Look, IBM is one of those stocks that moves like 30 cents a day. It moved 15 points thanks to AI. They pioneered Watson some years ago. So I'm hoping we see more like IBM this week than what we saw Intel late last week with those big names coming up, Apple, Microsoft, Google, and Amazon.